Welcome back to another powerful pocket option video. In today's session, you are about to discover just how powerful a moving average can be, but only when it is used the right way. This isn't just random strategy video. What I'm about to show you can completely change the way you look at the market. Get ready because this one can genuinely blow your mind and most importantly help you take precise high quality trades. Right now my main balance is $428 while the rest of my funds are safely locked. For this challenge, I will be trading with just $15, keeping everything controlled and disciplined. All trades will be placed on a 1 minute time frame using default settings, simple, clean, and focused. I've already applied my moving average setup on the chart. If you want the exact settings I'm using, drop a comment below saying moving average settings and I'll personally reply to you all. Now, without wasting any more time, let's jump straight to the trades. I have already spotted a strong setup on this currency pair. We had a clean breakout followed by a candle closing above the moving average. That's my first confirmation. Right after that, price came back and gave a perfect rejection from the moving average line, which is exactly what I was waiting for. Based on this, I entered call entries, trade one at the opening of the candle and the second as my safety entry to strengthen my position. Now, this is what I call a high quality trade. Why? Because everything lines up perfectly. First, we've got two strong bullish candles with one clearly closing above my moving average line. Second, we've got a clean rejection from the moving average confirming it's acting as a support. With this confirmation, this call entry is completely valid and backed up by logic, no guesswork. And look at that, the trade is exactly moving in my favor. Clean movement, strong momentum, and this is turning into a solid win. All right, traders, we are using moving average as a dynamic support and resistance level. Our goal is to catch clean breakouts in either direction. That's the core idea behind this setup. Now, after this previous trade is closed, I'm not forcing any entries. I'm waiting for another high probability setup, just like the one I took earlier. On this currency pair, I can see a potential opportunity forming. We've just had a breakout with a strong red candle. Even though the overall market still looks slightly bullish to me, I'm not jumping in yet. I want confirmation. If this current running candle closes as a bearish and gives me a continuation signal, I'll enter a put trade on the next candle. So let's see how this candle closes. Right now, the moving average is acting as a resistance. So the key confirmation I'm watching for this candle closing is below the wick of my previous red candle. That would be signaling continuation to the downside. So what I mean by closing of the candle, if I have to pinpoint the exact level, I'm going to take a rectangular box, and if this current candle closes below the wick of the previous red candle, that would be a continuation signal, and right now the candle did exactly like so. Because of this confirmations, I'm entering two put trades, one at the opening of the candle and second as my safety entry to manage my risk. Now let's break down the confirmations. First, we had a clear breakout below the moving average line. Correct. Second, the next candle gave us a clean rejection from the moving average, confirming it as a resistance. And third, we've got continuation with a candle closing lower, strengthening the bearish momentum. With these three confirmations, this become a very high probability trade. Now, we just let the trade play out and the candle should continue pushing down, turning it into a solid red and giving us a clean win. Now, you must be wondering that after this candle, I can place one more put entry if this candle closes below the wick of the previous red candle, because this candle will also give me a continuation signal. But let me clear you one thing. You have to notice what's going on the left-hand side of the market. We've got a red candle in a bullish loop. Okay, that is the lonely candle. So this lonely candle area works as a very strong support whenever market taps onto it. So the next candle, even though the trend continuation signal is already given by the red candle, it has closed below the wick of the previous red candle, I will not placing any more put entry because this next candle has tapped onto the lonely candle area, and this will also work as a very strong support. So whenever market does that, market can reverse. Even though we have got a continuation signal, Look at that. I have not placed any put entry because I already knew that market can reverse and give us a green candle. So this is not a high probability trade setup. Always look on the left hand side of the market what the candles are doing. And right now this candle currently tapped onto that area and now it closed as a green one. So here market can go either direction. I will not be placing any more trades. And right now in this particular currency pair, we have got the exact same setup. And as soon as I saw this setup, I have taken my put entry. We have got similar kind of setup. We have got a breakout from the moving average with a very healthy red candle. Then market went up, tapped onto our moving average line, and now it is acting as a very strong resistance. That's why I have taken my put entry as my marginal safety entry, and this should also be a winning trade. Even though the candle is trying to turn into a green one, but I know that this candle should close as a red one. Side by side, I also want you to keep watching the candle reaction, how the candle is reacting. And look at that. This is exactly going in my favor. If this candle closes inside the wick of the previous red candle, this is not a continuation signal. Market can reverse. If I have to mark what I am trying to say, let me take a screenshot and I'll explain you, okay? So here we have got a nice breakout, and then market went to retest the moving average line perfectly, and then we took a put entry for the next candle to the downside. But we have got a problem here. The candle has closed inside the previous wick of the red candle. This is not a continuation signal, which is why I'm not going to place any downward direction trade. The next candle can go either up or down, and look at that. Just as I anticipated, this candle is reversing. Alright traders, I hope you liked my video. Don't forget to join my Telegram channel. Link is mentioned in the description box. With that being said, I'm signing off for today. I'll come back with another powerful video. Until then, keep learning and happy trading.